Welcome. Godric here, your stock market mentor. Coming at you Monday night, October 14th, 2024. Columbus Day, if you still celebrate that. Indigenous Day, either or. I got your back. We're going to look at some stocks tonight, answer your questions, look at some trades. So the good news is the Dow Jones broke another all-time high, 43,065 plus 201. For you guys that don't have stocks, that means that the people who have stocks, most of them, not all, but most of them are making money. When the market like the Dow Jones is at all-time high, that generally lifts all the other stocks up with it. S&P 500 also at an all-time high, and that means that most stocks are going to lift up with that wave. Almost everything's up. So you guys, that make a lot of money, I want you to check yourself. Maybe you're not so smart. Maybe it's just that the market's up. You guys think like you're the Wolf of Wall Street up here would make some money, and the market's at all-time high. But like, I'd be more impressed you make money when the market's coming down, when we're in the bear market, or when we're in the volatile market. Think about that. Welcome, Tillin, Greg. Welcome, Givo, Eddie. Appreciate you. Godric here, your stock market mentor, coming at you Monday night. We're gonna look at some stocks and get to your questions. I usually do this for about an hour. Well, we went for an hour and 20 on Friday. But and what I did. Oh, by the way, you guys that were looking for the show on Friday. Since we went an hour and 20 minutes, I couldn't fit it on the TikTok. The TikTok is max hour, so I put it on my YouTube. So you guys want to look at the show that's recorded. So that show recorded from Friday, I couldn't fit it on my TikTok because it was more than an hour. I didn't want to edit it. So go to my profile, click on YouTube. It'll be Affluence 8, that's me. And then you'll see that I have the last video on the latest. So you can check it out. If I don't have on my TikTok, it's going to be on my YouTube. Check me out. Give me a sub on YouTube. Appreciate it. Appreciate your subs here. Oh, if you sub here, it's only $5 a month. And what I do, I can answer all your questions about stocks and your positions. I can look at your trades and can mentor you how to retire into the stock market. One question at a time, please. Or just hang out with me Monday nights. We'll go over it, get into it. Tanner, welcome. Think Time, welcome. Hayberg, 1955, welcome. Good year. Kale Smith. Okay, so let's pull our calculator up. We need a calculator. I'll log into my account. I have some pictures for you guys on my phone. I'm not able to show you my computer screen. If one of you guys knows how to go live and show me how I can show my computer screen, I appreciate it. You teaching me, I'll teach you. Right now I'm just using my iPhone. I took some pictures, and I'll show you the pictures I took about trades, about positions, about some stocks, and then we'll talk about all the rest. Someone asked me today about covered calls. They wanted to know what the trade actually looks like, and what I did, I took a picture of the position. I'll show you. Research Anybody who wants to know, this app I use, I'm going to show you in a minute, is Thinkorswim. It's Thinkorswim. Now it's by Schwab, because Schwab bought up TD Ameritrade. And that's what I trade on. I don't do Robinhood. I don't do Webull. You know, I got to have all the bells and whistles. So I do Thinkorswim. All right. And let me show you a couple of things. Those of you interested. Okay, so showed you the Dow Jones. Apple is up today, 375 to 231. That's a big one. AMD was down a little bit. Google, Altria, Amazon, all maintaining. We got Duke Energy's a dividend stock. Bros is like a Starbucks copycat, but they're doing okay. There's GME for you guys. For you Roaring Kitty fans. IEP is the dividend stock, pays 20% dividend right now. QQQs are not at all-time high, but if you look at the QQQs, they're probably going to break the all-time high. Write it down. The all-time high for the Qs is, I think, 503. Let's see. So if you're going to get a call option, or the shares, the all-time high, I think, is 503. So we're really close. We hit the Dow Jones, we hit the S&P. Now we got to get the Qs in there. So that's next. Write it down. QQQ to break 503. I think that's intraday. Let me see. Yeah, 52-week range, 342 by 503. So we're getting there. 26 million volume. That's important. Write down volume as a check mark for stock selection. Volume check. 10-year chart. Check. You want your stock to have performance. You want it to have proof that it can do something. 10-year chart will show that. What else? PE. PE is profits. Here's my 11 criteria. Okay, I'm running through for you. If it has a PE, positive number, 10, 20, 40, 100, means it's making profit. If it has a negative, it has a dash. If it has a blank, it's losing money. Red flag, okay? Number 3 is PE. Number 4, let's do share price. This is for stock selection, guys, okay? You want to return the stock market, you can't buy crap, you can't buy ideas, you can't buy, like, throw darts at a board, no monkey picking stocks. This is real strategy, okay? Share price needs to be ideally 100, 200, 400, you know, a nice, healthy, high share price. Those are, like, sexy right now. You know, $10 stock, $20 stock, not really. Where has it gone? Hasn't gone anywhere. It hasn't made anybody money. It was only $5 or $10 or $20. So look at, you know, 100, 200, Apple, Netflix, 700. Look at Tesla, 200. NVDA, 134 today. You get the idea. These stocks are kind of all in this healthy share price that's higher, and they're better because they've gone up and up, made the investors money. They have a high share price to show for it. And they have a 10-year chart. Let's go to number 4, 5. Let's 5 be dividends. Dividends are important. It shows a company is willing to pay back some money. A dividend is better than no dividend. A tiny dividend is better than no dividend. Ideally, dividend, you know, anywhere between 1 to 5% a year, maybe more. But dividend is number 5. Check mark. Number 6 is cover calls. Let me get into that. Cover calls. If the stock has good cover calls, it's going to pay between 3 to 5% return in 1 month, consistently. This is Tesla, TSLA. This is NVDA, NVDA. This is Palantir, PLTR. This is AMD, AMD. This is, give me one more. Apple, not really. Netflix and FLX. Okay, let me show you what it looks like. Someone wanted me to show the cover call. This is NVDA. Okay. First, I circled some market cap. They had a nice market cap. Matter of fact, let's have market cap number 7. 50 billion or more, it gets a check mark. So this is 3 trillion or 3.3 billion. So check mark, market cap, nice and fat. Volume, that's a check mark. Volume should be 2 million a day plus. This one's 232 million, check mark. Okay, so I look at that, and here below me it shows the daily. It's kind of moving up. Actually, this is the 20-day chart. If you're trading, look at the 6-month chart and the 20-day chart. Those are important for trading. That's what I use. Matter of fact, I have this one, I think. Okay, see, I didn't get the whole thing. You guys got to teach me how to show the whole thing. Is better. You see that? See that W pattern? This is NVIDIA. Up $3 today. See the W right there? W is for the win, going up. This is Tesla. It's kind of different, not so positive, but that's a 6-month chart. Speaking of Tesla, we came down in Tesla. I want to show you, this is I sold a call option, okay? If you look here, it shows sold it for $1,100, and now it's showing $1,000 profit because it's like $1, which is $100. So $1,000 profit. So if you sell a call, it's like being short, okay? The stock comes down, you can close the position, you can make money. The point is, you can play both sides, okay? So I went out 3 months when I did this. This is just one call example. I sold the $295, which is way above the strike price. At that point, it was $11. I got paid $1,100 for doing that. And then now I can close it and make $1,000. I only have to pay $1.96 times 100 $100 to close it. So technically it's a short position. So look at that, write that down, sell a higher call, short position, stock comes down, you make money. That's a short sell, one call. That's a short side. What else? Some charts. Okay, so here's the cover call, guys. So you look at the stock, okay, and you see it has options in the middle. So you click the option. See that? And then this is the Thinkorswim platform, right? And then you'll go into, this is Tesla. And then here is the option chain. Most stocks have option chains. Most stocks that have option chains have about 1,000 or several hundred options. I'm showing you the exact option. Save you all the time. Showing you the exact option you need to sell to bring in money every month. If you got 100 shares of Tesla, for example, you can write one call, sell one call every month. In this case, we'll sell the 230. Because why? Because it gives you 10 points of share growth. The stock is 219 and change. It gives you 10 points of share growth, plus it pays you $1,000. You see how it says 1040? That's $1,040. You guys with me? Write that down. Tesla, $1,040. And this is a monthly trade. Now, Oh, by the way, when I click options, you go 1 month out. So today is 10/14, the 14th. I went to November 15th. This is November 15th right here on top here. November 15th, which is 30 days. Write it down. Consequently, every 30 days is going to look like this. You'll get around $1,000 for your Tesla, including some share growth. Even after the stock came down, they're still going to pay you $1,000 every contract. For what? For agreeing to sell the shares, in this case at 230. I'm showing you the exact option you need. I'm showing you the option that's going to get you the best trade on the cover call. And let's do the math. Our investment. So 100 shares is going to cost you 21K, 21.9, okay? So 219, actually no, the premium, 10.4, 1040. That's your premium. That's $1,000 divided by your investment of 219.16. Get the change in there. Investment. 4.74% return. 4.74% return, which is $1,000 on 21,900 shares. I mean, 21,900 Tesla value, which is 100 shares, right? So, again, you're going to buy 100 shares of Tesla at this price at the market. We're going to write the cover call 1 month out, every month. Agree to sell it for a higher price, 10 points more. And for that, we're going to get about $1,000, $1,040. And that is basically how the cover call works. Sell one, in this case, November 230. Call. I even circled it for you. Okay, questions? What's up, guys? Appreciate you. Bruce, Tyler. Guys, give me some likes. There's the people in here. Give me that pat till that likes explodes a few times. Let's get maybe 1,000 likes in here, 500 likes. Algorithms, get some people in here. Appreciate you. Tap. Jerry, welcome. Thank you for liking. Bruce, welcome. Give me some likes. Let's get those likes up, guys. So, I'm explaining a cover call. You got to do this trade several times before you kind of get the feel of it. But all you're doing, similar to how an apartment owner can buy an apartment, let's say 10 units, and rent out the rooms, every room, for money, a stock market trader can buy lots of 100 shares and rent out those shares to the public, to the option chain, to the option traders every month for income. Let's say you rent your rooms out for $1,000 for an apartment. Tesla's paying $1,040 for every 100 shares. And all you're doing, you're giving away some of the upside. On this case, if it goes past 230, the option will be assigned, and your shares will sell at 230, and you'll get cashed out, and then you can always buy them back and do another cover call. But meanwhile, when you do the trade, when you sell one November 230 call, you're getting $1,040. You're getting 1040 times 100 shares, $1,040. Just like that, 4.74% return in a month. And what does that mean? That means you do 10 calls a year, that's 47% return. Hello. 47% return right here. I just showed you the trade. I got your back, man. I got your back. Are you going to be like one of those dudes at Walmart checking receipts at 75 years old? Come on now. McDonald's doing orders like, sir, can I take your order? Like, can I eat some fries? I love McDonald's, but do you want to work there? Is this your financial plan? Listen up, write this in your journal. I got all this criteria tonight for you. I got cover calls. I'm going to answer questions. You guys got no excuse anymore. Appreciate you. Give me some more likes, guys. Oh, look at those likes. Love likes. You know what? If for you gifters that want to throw me a crane, I won't say no. Throw me a couple crane or two. For the subs, if you sub, it's only $5 a month. Answer all your questions. Look at your stocks. You can DM me. Just one question at a time, please. And if you do this right, learn how to what? Retire into the stock market. You can pay, look, $1,040. Look, you have 22K basically invested. You get $1,040 a month. What's that going to pay for? $1,040 you can pay like for a storage bill, pay for your Netflix stream, some Starbucks, maybe water and power. It probably won't pay all your mortgage, but maybe some of your mortgage. I mean, would you say no? It's kind of like free money. If you know how to do the trade, it's free money. You're taking the value of your shares. You're giving away some of the upside for a predetermined amount of money. It's like a bird in the hand is worth two in the bush, right? So people who have the shares, they want Tesla to go to the moon, right? And if it goes to 250, 300, then they make a lot of money. But it doesn't do that, especially not every month. So what we do is, as cover call writers, every month we give away some upside, in this case beyond 230. And those option buyers are going to buy it. The moment you press sell one call, they're going to buy that baby at the market. When you do it, you get your $1,000, you get your return at 4.7%, and you're happy. You do it every month. So while the stock is not going to shoot up every month, the cover call will come in every month that you do it. Now, what are the downsides? Well, the stock comes down, you're going to lose some share value. You know, let's say it comes down to 200, right? Tesla, 190, right? Let's say in the market correction, 180, right? Well, check it out. You lose some value in your shares, but look, you can still do the cover call next month. You still bring in $1,000 on or about. Think about those apartment owners, those real estate owners who rent all these rooms, making the money, right? They can make a monthly income on their units. You can make a monthly income on your shares. If the apartment value comes down, if your real estate value comes down, okay, well, there's a bubble, you know, it came down, whatever, the value comes down, you can still rent the rooms. So while Tesla might go to 220, 210, 200, 180, 190, fine, let it come down. You can still do the nice cover call, bring in money, bring in $1,000 a month, in this case, 47% a year. More if you do 12, it's going to be more. It's going to be more than 50% if you do 12 cover calls. Questions? Arthur, appreciate you. Thank you for the likes. Oh, broke. Ooh, 14. Thank you. Broke those likes. Beautiful Dreams. Good name. If you have a question for Godric tonight on these stocks, on these cover calls, I got 7 criteria here. Let's do all 11 criteria. 9, 10, 11. Let's just do it. Let me see if there's any questions here. If I miss your question, just put it in again, okay? Appreciate you. I can only scroll back so far. When you ask me a question, I'm going to read the comments. You want to throw me a crane? I won't say no. You want to throw me a sub? You can talk to me in my DMs. I'll pull up your stock. Also, I let subs up to discuss. You want to come up on my live? How do you pick the best call option or put? I got clipped. Dude, I love your name. How do you pick the best call option or put? Okay, so first of all, let me show you how to pick the best stock. Okay, because we have puts and calls, but you gotta have the right stock first. So let's go through how to pick the right stock, and then we'll look at the call option and the puts on that next. So like the requirement, the criteria I have here: volume, 10-year chart, PE, share price, 100, 200, dividends, cover calls, 3 to 5% a month. Tesla is 4.74, so right in there, perfect. Market cap 50 billion plus. Number 8 can be stock splits. Stock splits are, even though people are going to tell you it doesn't matter, it matters. It's like size matters, it matters. Stock splits are one of the best criteria to select stocks. Why? Because most stocks that are very successful have gone up and up and up in price over time, and they've split down 2 for 1, 4 for 1, 10 for 1. Someone wanted me to pull up Broadcom, just had a 10 for 1 split. SMCI, supermarket computer, just had a 10 for 1 split. Tesla had a split recently. Apple. So write this down. Go to stock split history.com. Stocksplithistory.com will show you every stock that split or didn't split. Just put your stock in there, the symbol. So let's do Broadcom, AVGO. Broadcom had one split, 10 for 1. Okay, so it gets the green light on that. On number 8, stock splits. But if you look at, Coca-Cola, right? They just broke 100 years on the stock market. Coca-Cola has had 9 splits. Microsoft, MSFT, has had 9 splits. Walmart, WMT, has had 10 splits. In 75, 2 for 1. In 80, 2 for 1. In 82, 2 for 1. In 83, 2 for 1. 85, 87, 90, 93. So stock splits means that the stock, let's say, goes 100 and then splits down to 50. Then they have the price, they double your shares, right? But then what happens, and here's the trick, it starts climbing back up to 100. Then they split again, boom, double your shares again. So if you had 100 shares, now it's 200, then it's 400, then it goes back up again, 800, back up, 1,600. You see where this is going? It's called exponential growth. Don't let anyone tell you the stock splits don't matter, okay? Starbucks, SBUX, has had 6 stock splits. Netflix, NFLX, has had 2 stock splits. Tesla, TSLA, has had 2 stock splits. In 2020, a 5 for 1. In 2022, a 3 for 1. Meaning, if you could multiply your shares to 219, multiply it times 5, and then multiply it again times 3. That's how big the shares would have been, like $5,000. Hey, let's do it. 219. We know it has stock split 5 for 1, Tesla, times 5, equals 1,095, and now times 3 because I had 3 for 1. The shares would have been $3,285. Now we know that to do a cover call on that stock, we have to have 300K. So what happens is they split to the lower price to attract new investors, attract more traders, and that makes people that encourages traders to come buy more shares. And what? They like the stock's doing well, it climbs back up, and just more and more and more stock splits. So I had enough. We talked about that enough. Stock splits are very important criteria. Number 9, let's do can it double? Can it double? For the can it double criteria, you need to bring up the 3 to 5 year chart. A lot of stocks, you'll notice, let's just look in the video, I'll show you, have doubled or tripled or quadrupled in 3 to 5 years. I'm going to pull up the 3-year chart for NVDA. It shows 5 years ago it was 135. I'm sorry, that's a 1-day chart, sorry. 5 years ago it was $5, and now it's 138. So 25 times. Do you see what's happening? So NVIDIA can double. So the theory is that if it's doubled in the last 5 years, it can double again. So NVIDIA gets the check mark for can it double within the 3 to 5 year chart. If I remember correctly, number 10 was new high. New all-time high. Or NH, new high. If a stock hits a new high, it's criteria to buy it. I know it sounds contrarian, but what happens with these stocks, NVDA, Tesla, Netflix, Apple, Microsoft, they break new highs all the time. They break the new high. Again, they're making another high, making a high, making a high, making a high. It's not a new low, which you might think to buy when it comes down. Actually, no. You're buying stocks that are outperforming the whole market in this case. So if it hits a new high, that's a candidate to buy. Okay, why? Because the theory is it'll go higher. All right. The last one is can you buy the product? Can you easily buy the product? This one's kind of like I added this one like just in the last couple of years. I noticed that a lot of people make the big mistake of buying a stock that is not even on the market yet. You can't really get the product. Like where do you Apple, get the iPhone. Starbucks, you get your Starbucks latte. Netflix, you stream to your living room. Amazon, you have it delivered to your door. So these products are easily accessible to the public. If your product is not easily accessible to the public, I wouldn't give it the green light. Boeing, for example, rely on government contracts. If the government peels back, then they're not going to get the contracts. You can't buy Boeing unless you're Donald Trump. You can't buy Boeing anything. So that's an example where it doesn't get the check mark. Palantir also. They do counterterrorism. So the government's going to have to provide that. Again, you can't buy the product, What can you buy the product on? Starbucks, Coca-Cola, Pepsi, Netflix, Apple, AMD, NVIDIA, right? Makes sense? So there's 11 criteria. Write them down. If this is this stream is probably gonna be more than an hour, so I'm gonna put it on my YouTube. So click on my profile, go to my YouTube, and you have it there. So that's gonna be, and then answer the question: what option or call or put do you pick? It depends on your strategy. Like what I would do, I would get a gray stock, one of these gray stocks I'm talking about, with all these check marks, and I would go out, 6 to 9 months. Because why? Because you never want to buy an option for next Friday, because that's going to expire right away. You want to have time. You want to pay for a little bit more time, so your stock can develop and grow and mature. So think about going out 6 to 9 months for a call or put, and you're going to buy a call. Like I'm going to bring up, let's say NVIDIA, right? Let's do NVIDIA. Click on options. All strikes, all expirations. Let's go out 6 to 9 months. Let's go out next year to August, June. Let's go August. Okay, so now we know the video is good. It has all these check marks. It has a PE, has a volume, has a 10-year chart, etc. We know a stock is priced 138. Okay, so when they go out 9 months till next year, we look at what they cost. Like the at the money, which is 140 at the money, close enough, is $26, which is $2,600. So NVIDIA for August of 2025 is 26.55 at the 140 strike. So that's at the money. So that's the first lesson. Like you want to buy around at the money, because the theory is stock will go higher because we're picking great stocks, and then your option will go in the money as the time goes by. Stock go up a little bit, creep up a little bit. Market's doing well. This $26 stock, this $26 option will go higher into the money. And then if we're paying $2,600, $2,655 for one call of NVIDIA, August 2025 140 strike, that's controlling 100 shares of stock. Okay, you know what it's going to cost? The stock is 134, so it'll cost $13,400 to buy 100 shares. So you can either buy a call option, go 9 months out for $2,600, or you can buy 100 shares for $13,000. As you can see, one is cheaper, right? Now, the difference in risk is that in a year from now, we're going to have an NVDA company. They're still going to have employees, still going to make a product, right? So the shares are going to be either the same price, lower, or higher, okay? $13,000 investment will go up. Let's say next year the shares are $200. You heard it here first. NVIDIA is $200 by next year in August, okay? So the investor who has 134 share price has made 60 points or 56 points. Actually, no, 200 would be 66 points, so $6,000 profit. 6,600 profit. But this call option, you put 2,600 into it. Now that one has raised also 66 points. So on the call option, you went from 2,600 plus 6,600, you went to 9,200. Whereas the stock shares, you went from 13,000 to 20,000. So the return on the options is much higher. There's a leverage on the option, going from 2,600 to 9,200, as opposed to the shares going from 13,000 to 20,000. So that's the thing. So the downside is that the shares don't go up. This call option will start going down in value, and if it doesn't make a profit doesn't go past 140 by next year, this call option will be worthless. It'll be zero. That's the risk. You have a much better leverage on the call option than the shares. But the shares are still going to be there. Even if the shares are the same price or down, you'll have the shares maybe lose some value. No worries. But this call option is like a hot tomato, a hot tamale. You need to either trade it when it goes up. So what I do, if this $26 call option will go to 30 or 33 or 35, I'm just going to sell it, get 10%, 20% return, get it for 2,600, sell for 3,000, 3,500, even 4,000, But the more greedy you get, the more chance the share is going to sell back down. You're going to lose your profit. So don't get greedy, Think about 10%, 20%, 30%. If you buy a call option for 26 points, you might want to sell it, let's say, for 36. You get $1,000, like that. And if you write this down in your journal. August 140 strike, 2025 for NVIDIA, $26 right now. If it goes to $36, just as you're watching it, you have made $1,000 if you bought one contract right there. That'd be a good trade. If you want to take it all the way till next year, see what happens, you take more risk. But if it does go to $200 a share, that call option is going to be maybe around $9,000, depending on what time frame. That's how it works. Now on the put side, what I would do, I like to play both sides. I'd buy a put just a little bit out of the money because I like to. I also trade the put, and I don't want to spend too much money on the put because I assume the stock will go up. But if it goes down, which it eventually will go down, that put's going to get more valuable and you can sell it. So what I would do, I'd buy the 120 put. And for that, it's $1,370. So $1,370 on the 120 put. And going on also 9 months, August 2025. And the strike is 120. And what happens is, if the stock, when the stock goes down, it will dip. you'll see this $1,300 put go to $1,400, $1,500, maybe $2,000. You know, if you guys remember, NVDA was like $100 not that long ago. It actually broke 90 something. So that happens again. This 120 put is going to be like 3,000, 3,500, 4,000, and then what? Pull the trigger, sell. That's what I do. So, and the value of going out 9 months is you have all this time for your option to mature, to either it's going to go up, pull the trigger, it will go down eventually, pull the trigger. You can actually trade both at a profit. Just wait for the right time. Patience. With patience, you can rule the world. That's why I do the put and the call. Pretty good. All right. Sorry that took long, but that's how I do that. We went over the 11 criteria. We went over a trade, a put and a call trade on the video. Went over the cover call on Tesla. Dude, I'm taking care of you guys tonight. Damn. All right, questions. If I miss your question, just put it in again. I can only roll back so far. Thank you guys for the likes. Let's get to 2,000 likes. If people can't beat the S&P with time, why not only buy S&P? Arthur, good question. Arthur, if people can't beat the S&P with time, why not only the S&P? Okay, great question. S&P tends to go up around 11%, 12%, you know, more or less. I think it's up like 20% this year, you know, which is a little extra, you know. So like if you were invested in SPY, so if you just buy SPY right now, SPY, which is the ETF for SP 500, represents the top 500 companies, you know, Apple, Netflix, NVIDIA, Apple, Google, Meta, okay, all these top companies, Tesla, Chipotle, right, Starbucks, Philip Morris, Coca-Cola, Walmart, all those are in the S&P, right? And if you're going to pick a stock, I prefer you pick a stock in S&P 500. Because why? Because that's like the top brass. Like, think about, there's hundreds of mutual fund managers that manage pensions and manage a lot of investment money. And they cover what? The S&P 500. They have to buy those stocks. They don't got a choice. So as long as you're in there, in that top brass, you're going to have mutual fund managers buying your stock. That's got to be worth something, you know? And these other no-name penny dog shit stocks you guys trying to buy that don't go nowhere, that you're trying to trade, those ones are shunned by the big money managers, and they may not go nowhere. So have a criteria, have standards, go with the top brass, especially if you're starting out. Don't guess, don't gamble. Go with the tried and true. All right. Okay, so back to your question. S&P 500 will tend to make, let's just say 12% of return a year in the last 10 years, right? Well, here's the thing. You can't pay your bills with that, because if let's say you buy a few shares of S&P 500, let's pull it up. Let's pull SPY. SPY ETF. And let me read for you guys. I haven't read this one, I don't think. The investment seeks to provide investment results that, before expenses, so they charge 1% on this, or 0.5%, whatever, but you won't notice it, I don't think, correspond generally to the price and the yield performance of the S&P 500 index. The trust seeks to achieve its investment objective by holding a portfolio of the common stocks that are included in the index portfolio, with the weight of each stock in the portfolio substantially corresponding to the weight of each stock in the index. By the way, that's bullshit. If you look at the S&P 500, just pull it up on your ChatGPT and ask it which stocks affect S&P 500 the most, and they'll show you Apple, Netflix. They'll show you the top stocks, right? So you probably do better, you know, just selecting a few of those stocks, right? But to get what's called the diversification, the protection, just buy SPY, okay? Now, let's say you put 100K, okay, 100K in SPY. There's a small dividend, maybe like 2%, so you get 2,000 a year. But other than that, you're not going to have income. So you have to sell shares to get your money out. But wait, what if you want to live off your shares and live and retire in the stock market? Okay, you need income. You need something. You need to pay your bills. You have rent. You have mortgage. You got to buy food. Look, one, you got dividends. I'll show you one of my favorite dividends. Let's do MO. Altria Group. $49 a share, $49.93, $50 a share. Let's look at the dividend, shall we? Oh, 8.19%. Oh, 8.19% dividend. On 100K, you're getting $8,119 a year. On $1 million, you're getting $81,000 dividend. And most of us have $1 million by the time we retire, either in our 401ks or ideally you saved up over time. So if you're getting between $8,000 and $81,000 a year, you can supplement your Social Security. You can supplement your pension. You can live off that money. You can't live off $2,000, on the S&P 500, those shares. And the same thing if it was in Apple, which is a tiny dividend. If it was in Meta, if it was in Microsoft, dividend's too small to live off that. It's very tiny dividend. So you have to sell shares to pay your bills. So why not invest? Why not do something different than just the S&P so we can get money? We can make money in dividends, for example. I just showed you the Tesla covered call. I got a 47% return in the Tesla covered call. I got $1,000 a month in the Tesla covered call for 21K investment, 22K. $1,000 a month income, selling the 1 month out call at a higher strike. So you can still make more money if the stock goes up 10 points. Stock was $219, we sold at $230 for 30 days out. Write it down. So would you rather get $1,000 a month on your Tesla? Would you rather get $81,000 a year on your Altria or other stocks that are equal to that dividend? Would you rather just hold the S&P and hope it goes up and make a small 2% dividend? That's the difference. I'm trying to show you. I'm trying to improve what you got. Okay. Now here's the trick. When the market comes down, and it will, and the market will come down. Mark my words. There's going to be a crash, correction, whatever. You know what's happened. Mark my words. You heard it here first. Guess what? Your S&P 500 is not going to get you that 10% return. It's going to be like minus 20, minus 30, minus 25, right? So now your investment comes down. Where's your money? Guess what? Your dividends are still going to come in. Your covered calls will still come in. That's why. S&P 500 is great for people that don't know how to trade, that don't know what they're doing, which is most people. Let's be honest. Like, most people working 95, 40 years don't do trading. They don't do investing. But whatever, they play around, they lose some money, they learn, they get hurt, whatever. They turn their account into gambling, right? They don't have criteria. They don't know how to do a cover call. They don't know how to pick a good stock, right? They have penny stocks, So that is risky. There's no income. They got nothing. They trade their account, they lose some money, and they get hurt, and maybe they don't come back, But S&P 500 is good because for them, just buy SPYs, buy QQQ, buy SPY, because it's going to keep them out of trouble. They're going to probably make 12% a year over time, 10, 20, 30 years. Okay, probably. When the market comes down, right? They're going to lose value. They're going to be down 20%, 10%. But guess what? The dividends are going to come in. The cover calls are going to come in. If you got the call for, what was it? NVDA call, the 120 put for August 2025, the 140 call for August 2025, Both of those are going to come in probably, if you're not greedy, when it swings up, you sell the call. When it dips, you sell the put. Pull the trigger. That's trading. Easier said than done. You got to do it to get the experience. You got to learn how to do it. Trading. Patience. And if you can do it right, that's money. If you don't do it right, you're going to lose. I'll be the first to tell you. But otherwise, you're sitting here looking at the S&P. I'll tell you what. If you're a crappy trader and you know what you're doing, just buy a few shares of S&P, whatever you can afford. Just buy SPY, QQQ, SPY, DIA. DIA is another one. DIA. David, Ingrid, Apple, Spider, Peter, Yolanda, QQQ. Those are the three big ones. They take about 1% commission. Oh, they get paid. They're not going to give you the full return. You'd have to buy all the shares to do it yourself to get the full return. And by the way, these guys cheat, did I tell you? The DIA, SPY, the QQQ, they'll kick out the weakest stock all the time. Just kick it out, replace it with the new kid on the block. And you don't know because you're just in the QQQ, right? But that individual stock that failed got kicked out. They just brought Tesla in the S&P 500 like the last couple years. Before it, they kick one out. They're bringing Tesla, so they're always going to be switching. They're always going to be improving. So don't think you can just get a stock and hold it for 50 years. It doesn't work that way. Because if it doesn't perform, they're going to kick that shit out of the DIA, the Dow Jones, the S&P 500. You have to earn your play. You have to earn your stay every year. Otherwise, they'll kick you out. So don't think they just hold the stock forever. That doesn't work. That's why I say they cheat. Okay. Questions. Godric request. Thank you. Would love your opinion on my AI automated page. Wealth and wellness. Send me a DM. Take a look at it. AI, I'm impressed with AI. I have that ChatGPT AI. I'm kind of impressed. I kind of teach my AI what to do. Like, I was teaching how to do cover calls because they didn't know. It knew some stuff, but not really. And then it tells me, oh, yeah, you're doing it right. You have the experience. I'm going to tell everybody what we learned. I'm like, okay, well, so what I taught my AI, my ChatGPT, is going to tell everyone else the answers that we got. Okay, fine. It's like a learning computer. Questions. If I miss your question, just send it again. Tesla 2300 before 2025. I don't think so. 2025 is in 2 months. So, no. Tesla will probably go to 240, 260 at the most. Why? Because there's so many traders, investors in it. I want to tell you guys who trade. This is important. There are people who are professionals that manage $1 billion, and their job is to make money. And believe me, when they have Tesla or NVDA, whatever stock they have, the big ones, Apple, etc., Starbucks, Netflix, when their shares go up 2 points or 3 points or 4 points, like today plus 3 in NVIDIA, they sell, they close. So if it dips tomorrow, don't be surprised. And what? They made money because they have to make money because their ass is on the line. That's their job, to make money. They got to sell. The boss looks at them, you going to sell those shares? We're up. Yes, sir. Right away, sir. Sell. They keep their job. They give their investors a little profit. And then the stock dips the next day. And what? They go back in and buy. And most of you guys that are behind the 8 ball, that are like following these people, you missed your trade. You look right in this roller coaster trying to think when you're going to sell. And when the market corrects or dips, some of you guys get chased out and lose money. So it's like when the professionals are selling, when it's up 3 points, 5 points, 10 points, right? You think, oh, I'm making so much money. Look, my stock's way up. But you didn't sell. So when the professionals are selling, making money, stock comes back down, then you go all the way back down. You lose all that money because you didn't trade. And that's why we trade. We try to trade. We learn how to trade. And if you do well, you can make some money. I'm not saying, trade is difficult. They're giving me the puzzle test. So guys, trade is difficult. It's easy. I might just make this look easy, but it's not that easy because we don't have that foresight of what's going to happen in the future. We have the hindsight. We look back, look what happened, right? So when I tell you this trade, it's not going to be exactly. The shares may go down, The shares may go up. Then you have to say, should I sell? Should I buy more? But if you get these 11 criteria, you'll stay out of trouble. Check if your stocks have, if they have like 8 or 9, you're doing good. 10, maybe you're doing great. But don't mess with penny stocks. Don't mess with stocks with no PE, with no 10-year chart, with no dividends, with no cover calls, no stock splits. Like, this is going. Like, eventually you're going to be holding a piece of crap that has no employees, that has no product. You can't even buy the product. That's when you know you're in a red flag and you probably messed up. Questions? Thank you guys for the likes. Appreciate you. Beautiful little dreams. If you want to send me a message, I'll answer. Question, send me a question. What else? We talked about the 11 criteria. We talked about putting a call in NVDA. Talked about Tesla cover call. Talked about some dividends. Talked about why the S&P, investing in the SPY or the SP 500 compared to other things, why it could be not so good. If you don't know what you're doing, you can just do that. That's fine. Better. If you learn how to trade, then you can start trading. Dividends, cover calls, trade peaks and valleys, options. But I think Tesla will go back to 300. I mean, the high was like 400, I think. Let me see. Hang on. Let me put Tesla. Tesla is underperforming this year. So that's important. Like you can't be in a bad stock forever. It has to perform. Otherwise, I'll be exiting also. But the cover call pays great, and it's maintaining. In the last year, it's actually maintained the same price. It was $250 a year ago. Now it's $220. Let's go 3 years. 3 years ago, it was. This is when it split. 409. That's the high. It has a lot of peaks and valleys. This is good for traders. And if you go to 5 year, remember I said the criteria number, you heard it here first, number 6, can it double? 5 years ago, Tesla was what? $22. $22 to 218. Went tenfold. Went up 10 times. So hell yeah, it's doing great. Give it some time, Maybe Elon has to, do his next thing. But it's the main game for EV. Elon is on point. I would say probably it'll be 300 by next year sometime, but not before. Give it some time. Meanwhile, get some cover call action on here if you can. If you can buy 100 shares, if you can't, you don't have 20K. Start with Palantir. Let's pull up Palantir. PLTR. Palantir is $43. So you got 4K. You got 4K. Look at this cover call. I'm gonna show you. Write this down. Wow, 1 month. Click on options. Go to November 15th. All. If you don't know what app to use the Thinkorswim app, and then ideally you have an account at Schwab. But if you do Robinhood, I don't know. I don't like Robinhood. They don't have no support. November 15th, buy the shares here, 4,300. For 1 month out, November 15th, write the 46. So the shares are 43.50. Okay. Buy the shares tomorrow a.m. 4.3K. Okay, 100 shares. Right there, 46. Cover call. You get paid $2.33. That's $2,033 per share, or $233. Whereas Tesla's paying you $1,000, Palantir is going to pay you $233. But Palantir is a lot cheaper. Okay. Now we agree to sell the shares for 46, which means it can go up. We can make some more money in the shares. But after 46, they're going to take them away. They're going to cash us out, which is what we agreed to. Every month you can do this trade. $233 a month, and that will pay for what? Some dinners, maybe buy a couple clothes. Let's do the math, shall we? 2.33 is the premium on the cover call for 1 month out, 46 strike, divided by your investment of $43.50 by tomorrow, 5.35% return. Better than Tesla, and that's going to be a 53%, 53.5 after 10 cover calls a year. Do you see why maybe you don't want to just do SPY? You see the return on this? Palantir. Let's look at Palantir. I don't think it has any stock splits. PLTR. StockSplitHistory.com. Palantir has 0 stock splits. You see, guys? You see? When you get a weaker stock, a lower price stock, it doesn't have the criteria. It has the volume. Let's do Palantir on the criteria. It has the volume. It's zeroed out because it resets at midnight, but it's like 20 minute volume a day. Has a 10-year chart. Oh no, it doesn't actually. Hang on. No, Palantir started in 2021, so it's only been going for 3 years. No 10-year chart. X. Has a volume, check. No stock splits. You see? So it's not as good as Tesla. You know, Tesla has all the above. But I would say let Palantir be the worst stock you invest in. It has a cover call, check mark. No dividend. No dividend. X for the dividend. X share price. Oh, it doesn't have share price. $43. Where has the stock gone? When it started in 2021, Palantir was as high as $35. So it went up only a little bit, 43 in 5 years. It didn't double. Doesn't have a 5-year double. X. Doesn't have dividends. It has a cover call. Check. PE. It has PE, doesn't it? Yeah. PE is 255. Very high, but still gets the green light. No 10-year chart. Has a volume. Has a cover call. Market cap. Market cap 97 billion. Has the market cap. Stock splits. No stock splits. X. Can it double? No. Does it have a new high? Yes, it has a new high, 43. And then can you buy the product? No. So really, 1, 2, 3, 4, 5. It only has 5 criteria. Damn, dude. So I want that to be the worst stock you invest in. But it pays cover calls. It pays you $200 a month, $230 a month. What do you want? Questions. See how quality, you can tell quality. Right here are my criteria. Guys, let me know your questions before we're going to wrap up a little bit. I'll come back probably Friday. What can I show you? I always look at the market cap, 700 billion, volume 86 million. You see how that healthy volume on Tesla. This is the stock. This is NVDA. Look at that volume, 232 million, 3.3 billion market cap. Here's the Tesla option chain, and that's the option that we're going to get 10,040 from. I circled it for you right there. And then this one is NVDA. Let's do NVIDIA cover call. Have it here. It's paying you $550. Let's pull it up. Let's do this one, NVIDIA. And I'll take more questions. I'm going to wrap up. NVIDIA Corporation, 138. So we're going to pay $13,000 for this by 100 shares. 138.08. That's $13,800 for 100 shares. Buy at the market tomorrow. Go out 1 month. Click on options. Click on calls and puts. All. I'm going to go out 30 days. November 15th. We're going to write agree to sell it for, buy for 138. Agree to sell it for 143. 143 CC call option -1. I'm giving you the exact call option that's going to get you the best premium, and it's going to give you the best chance to get more money if the shares go up. 550, which is $550 a month. So you spend $13,000 on the video, about 100 shares. You're getting $550 a month, and that's your business to write the cover call. In this case, just above the strike, 143. The strike is just above the share price, 143. The shares are 138. You see how that you get share growth right there? See how that works? Let's do the math, shall we? 5.550 divided by, that's the premium, divided by the share price of 138.08 equals 3.98% return. A little less, but hey, I'm not gonna. It's between 3 and 5. I'm not getting mad at you. It's NVIDIA. It's kind of fat. It's kind of overweight. It's not gonna double, triple right now. Just give it some time. But cover calls are paying well. The quality of NVIDIA is better than Palantir. So Palantir is paying 5%. NVIDIA is paying 3.9. Okay. 39%, 39.8, which is basically 40% a year, close enough. So why not do the S&P 500 and get 12% when you can get 40% in the NVIDIA cover call? Well, do the math. Would you like to get $550 a month on these cover calls for NVIDIA? Well, $550 pay. Maybe pay for your car note, some of you guys. All right. Final questions. Give them to me. We're going to wrap up, guys. Appreciate you. Thanks for coming. I'll be back on Friday. You guys want to learn this stuff, how to retire in the stock market, send me a sub. It's $5 a month, and I'll do whatever I can to teach you. Throw me a couple cranes if you gift. Appreciate that. And then just, if you can, just give me some likes while we're here. Give me some likes on the way out. Let me get this algorithm up. Get some more people in here. Thank you for the likes. I appreciate you. Thank you, Beautiful Dreams. Appreciate you. Final questions. And if you sub, I'll go on your DMs. I'll answer your questions. I'll walk you through these trades. You can also come up here if you want. Come up here on my live. If I missed your call, if I missed your question, so sorry. Just put it in right now. Try to get it. Tesla. SPY puts. Michael, SPY puts. Let me tell you guys something. The best time to buy puts is when the market is going crazy like this, breaking new highs. Let me show you a SPY put real quick, okay? You know how we would like to go at 6 to 9 months? Now we're going to go out 9 months. We're going to buy a SPY put. Why? For protection. It's like fire insurance. If your house burns down, you got fire insurance, you're good. You're good. You lose your family pictures. You lose probably all your shit, but you get your house back, right? Okay, so here's fire insurance, right? You're going to take 5% of your whole account. So you have 100K, take 5K. Okay, now, I don't want you to spend 5K for any nilly-willy reason. Why don't you do a cover call, get 4% in NVDA, 5% in Tesla, or 4% actually, 4.74% in Tesla, could recall we just did that. 5% in PLTR, could recall we just did that. Take that premium and buy your spot put, which is a hedge, write it down, hedge, okay? So here's the trade you're gonna do. Go out to next year, August 2025, 9 months, and we're gonna buy a put on the SPYs, okay? SPY. Why? Because the market will correct, and when it does correct, you have two options. You can sell your spot put at a profit because it's going to go up, or just hold it and say, wait, see what happens. It's because you don't want to just lose your fire insurance. You gotta have something, right? Here we go. Options. We're gonna go out of the money because look, when you buy fire insurance, when you buy a put hedge, it's probably gonna be basically you kiss it goodbye when the market goes up. It's only there in case we have a crash or correction. That's what it's for. Okay. That's the thing. It's not like we're thinking that we're gonna definitely crash and then we're gonna cash in. I can't tell you that's gonna happen. Probably gonna keep on going higher. But we're on August 2025. I like to go 30% out of the money. So if SPY is 584, 30%. So multiply it times 0.7. 584 times 0.7. We're gonna go 408. So we'll buy that 408 put, which is out of the money, but it gives you plenty of leverage if it's a correction. So the 408 put for next year in August is gonna be 410, close enough. So SPY put 410 August 2025 is going to be 362. Okay, that's $362. All right, for one put. So you have a 100K account. You're going to take 5K and put it in these puts. That gives you a nice little hedge protection. All right, now what's going to happen? If we get correction, some election interference or some war breaks out or just natural correction, these between now and September, these spot puts are probably going to shoot up, okay? And if at least 5% is going to give you some kind of cushion. It's not going to protect all your long positions, but it'll give you a nice little cushion to where if you let's say we have a 35% correction in the market, which is classic, okay? $1 million gets slashed to 700K or 675K, all right? And a lot of people might be like, that's a lot, but that's just common, right? These puts are going to go up in value, and it's probably going to, instead of having a 35% loss, you're going to have like a 22% loss, 25% loss. 100% different night and day. You'll be so happy you have that fire insurance, But if it doesn't correct, we don't get a correction, that $5,000 you put, just kiss it goodbye. Because the market's going to keep going up, and you'll know that you have your long positions, make you money, and you're going to be happy. And don't worry about it. You only got to have the insurance in case you have that fire. So that's my SPY put trade for you. I don't think we're going to crash right now. I think the economy is doing great. I think if you look at the world market, the USA is still the GOAT, greatest of all time, best in the world. So if you can compare us to anybody, we're still the best, right? But just look at history. It's going to happen. Be ready, Be ready. Thank you, guys. Appreciate you. Send me a DM. I'll try to get back to you. If you follow, I'm going to follow everybody back after this. I'm going to follow you back. Be back on Friday. God work out. The person who subbed, we can talk in the DMs. Hook you up.